Alger's Ankur Crawford is here with me at Post 9 to, I don't know, sift through some of the damage and really just maybe offer some thoughts as to whether you think there is a broader rethink going on of the big themes of the AI themes of the things that have supported this market for a while, or is it just caught up in the wash of what's happening with the market?
Sure. I think whenever you get volatility, you have to everyone starts to rethink their themes and tries to poke holes in what their thesis was. And however, let's just ground ourselves in what is actually happening. I mean, the AI theme is alive and well. You've heard it from Google. You heard it from Amazon. You heard it from NVIDIA recently in LinkedIn posts and last night on the call. So I think that, you know, as much as you want to rethink your theme, this train has left the station. I think there's no stopping it. But there are geopolitical kind of ramifications of what is happening. And so, you know, there are impacts of that on this AI trade.
When you say that the train has left, these companies are resolute, they're not stepping away from their investment, that suggests that the AI theme, in terms of this build out and these companies' determination to fund it and race to wherever they think they're going, that's intact. I guess the bigger question is, are investors giving them credit for that? Are investors being more demanding about knowing exactly how this is going to get a payback?
Of course, investors should always be asking how they're going to get a payback. And but one of the things that I think is lost on some is that some of the spend is existential. Google must spend. It doesn't want to spend. It has to spend. And you go down the list of spenders for AI, there are a lot of have to spenders that will continue to spend over the next 3, 4, 5 years because they can't miss the boat on AI because it puts their core business at risk.
So that would suggest that you still think the highest conviction should be in the beneficiaries of that urgency to spend, as opposed to those companies that feel like they're under existential threat, or all of it?
I think you should be investing in those that are the beneficiaries of the capex, for sure, all the way downstream to utilities and the semiconductors and the Vertivs of the world. So all that infrastructure is actually, we think that it's gotten thrown out like a baby's gotten thrown out with the bathwater.
Yeah. Now, you mentioned, policy influences on this. How does that come into play when it comes to things like, semiconductor exports getting caught up in some of the back and forth?
I think one of the things that is an unintended consequence of all of this, and let's just take NVIDIA and what is happening with NVIDIA. Over the last few weeks, we've seen the H20 ban. In the next few weeks, we'll see the diffusion rules, the semiconductor tariffs. And at the same time, what we've seen is Huawei, which is a Chinese AI semiconductor manufacturer. They do a lot more than that, but that is one aspect, has introduced a chip and a rack that is actually not that much worse than an NVIDIA rack. So we want to count out the Chinese and say, you can't do it without us, so we're just going to ban H20s. But actually, they can do it without us. And by stopping the NVIDIA's technology, which is truly our pride, it should be our pride of innovation of the U.S., we are pushing an urgency in the Chinese to develop faster and faster because they can't rely on our technology. And so I think we need to kind of understand what these consequences are of limiting technology to cross borders, whether because of diffusion rules or because of China. I mean, China is spending over $1 trillion in AI between now and 2030. They are serious about being leaders in this field.
Does that mean, though, does that suggest that it's almost kind of too late? In other words, if NVIDIA were allowed to sell as much as they could in China, it wouldn't necessarily stop that domestic development in China of competitors.
Well, I think what it would stop is the urgency by which they're doing it. And it would also, if the diffusion rules go through, we're basically asking India to go work with Huawei.
Yeah.
Right? Instead of saying, you know, you should be developing on U.S.-based technology.
Not to mention that NVIDIA's business now is largely, you know, predicated on installed base and software and the ecosystem, right? It's not just a one-time sale.
That's right.
Yeah.
And so I think we just have to be careful. And whoever is putting these, you know, this policy in place needs to understand exactly what we are doing and not play political football with NVIDIA.
Yeah. Do you think, just quickly, that NVIDIA right now, in terms of how the stock is situated and how it's valued and where the estimates are, accounts for that already, or do we still have a shoe to drop?
I mean, sure. I think that NVIDIA, if you look at the valuation, it is a sub-market multiple at this point.
Yeah, right.
It has been a sub-market multiple. There's a lot of fear that is baked into the stock. And you know, if they come out and they have to, you know, take down numbers because of diffusion rules,
yeah.
You know, will the stock go down? Probably. Is it getting cut in half? No.
Sure. Yeah.
So.